So today we will start with clause 32 onwards. Can you see the screen? Is it visible?
Yes, sir. Just one moment, sir.
Yeah, please.
Yeah. A very good evening to everyone who has attended the meeting. I extend a very warm welcome to each and every one of you. And today we have our speaker, Mr. Kaushik Ragunandan, who is a fellow member of ICAI, a qualified chartered accountant. And he is associated with Guru and Jana Chartered Accountant, heading the NGO division of the firm and handling various works like valuations, overseas direct investments, ERP implementations, handling strategic growth initiatives of the firm, and many other interesting uh, work fields. And we all know how wonderful yesterday's session was, and today it is going to be nothing less. And I request all of you to focus and enjoy and also learn in this session. Over to you, sir.
Thank you, John, for the introductions. So without wasting much time, let us start the session. And the rules or the things is as usual. I would request all of you to make the best use of the chat box present here. So let us keep this session more interactive so that whatever questions you have, you can ask me. I can ask you questions. Let us keep it more interactive and let us take it forward. So, so as I told you, the topic for the day is clause 32 to clause 44. So the first slide talks about the objective. So why is this needed? So the reason for this is that we need to understand the tax audit report clause. If we don't have the understanding of the clauses, then it's not useful for us. We cannot give any what they're asking will not be able to answer it properly. So to get the clarity of what is being asked, so the questions sometimes are very tricky in the form 3CD. So we should get clarity of what they are asking so that we can answer it properly. Where to get the information from? Information is spread across various places, but where to get that specific information to fill that specific clause is what is our objective here. What documentations we should maintain. So for every clause, there should be a working paper, and for every working paper should be supported by the documentation. So in this way, what documentations are necessary is our agenda or is our objective, how to fill in the data, and what are the practical challenges involved. So this is our brief objectives of this session. So let's start with the clauses. So clause 32 talks about brought forward losses and depreciations. So this is a data which is already available. So brought forward losses means also it already says that this information is already of the previous years. So previous years means it is available in our previous year ITR, and also if tax audit was applicable in the previous year, this information can be verified from that place as well. So the first step is like what is a brought forward losses and depreciation, and how whether it is flowing properly from the previous year return or not, we should be verifying it. So as and when you write what is the losses that is there, the returned losses, then the next step is to see this scrutiny assessments. Any assessment records is there means based on that assessment records, we should see what is the information. So you need to study the assessment records. Say what happens, IT return is filed in the previous year. So once it is filed, what is the next step? The department will issue intimation, yes or no? Will the department issue any assessment orders once the scrutiny is over? You can answer in the chat box. I request all of you to answer in the chat box. Rakesh says yes. So once an IT return is filed, the next step is the processing. So once they do the processing, they will give a intimation. So intimation, they will tell whether this whatever we have given our assessments, whether it is okay or not. In the sense, they will also do a computation in the intimation order. They will write that what is the income that we have assessed, what is the income they have assessed. They'll try to match all the numbers. So if the whatever we have filed, if it is equal to what the department has also assessed, then there is no problem. So the assessed amounts will also be equal to the returned amounts. Suppose it is not equal, then we have to give the amount which the department has assessed in the next column. So you need to update the assessed amounts from the IT assessment orders, past if any, with order reference numbers. So for every order, there will be a reference number. So that reference number, we have to mention it next to this assessed amounts. So in this way, you will fill in the firstly, you will fill in the returned amount. Secondly, you will fill in what is the amount that is assessed by the department. Third, we will write what is the IT reference number, order reference number. In this way, you will start filling it. So while doing this, what precautions we have to take? So remarks column, they have given one remarks column. So in that remarks column, they are telling any assessments, revisions, rectifications, or appeals pending should be disclosed. Suppose there is an appeal, or suppose there is a rectification, or there is a revision or assessments that is going on, then we have to put in the remarks column telling that this is still pending. So let me just show that to you as well. We will just see the screenshot of, we'll just see the form 3CD so that we'll get some clarity. Okay, I'll just share my screen now. So this is the clause 32. So here, if you see the assessment here is being asked first, then nature of loss, amount as returned, what we have filled in the IT return, that amount we have to fill it here. Or losses or allowance not allowed under section 15 BAA, BC, BD. So these are the sections where we have opted for lower taxes by foregoing certain beneficial provisions in the IT Act. So suppose we have taken benefit of these clauses, then what is the adjustment? Adjustment of the not allowed as per these sections, that amount we have to put it here. Then amount as adjusted by the withdrawal of additional depreciation on account of so and so. So when you opt for 15 BAC and BAD, this additional depreciation, whatever you have claimed, will be adjusted or withdrawn. So what is the amount that is withdrawn on account of this? Amount assessed, given give reference of the relevant order. So this is what we are talking about. The assessment orders, what is the amount we have to tell that amount. And secondly, we have to write the order numbers. So in the remarks column, this is what I was talking about. In the remarks column, you will start telling what is the, well, if there is any pending orders. So if there is any pending orders, then you will start telling this year, this amount is pending for assessment, is pending for revision. Like that, you will start telling it. So in this way, you will fill the remarks column also. So you need to verify if there is any search seizure has taken place and if any undisclosed income is identified. So what happens in certain cases, the department will do search and seizures. So search and seizures can be done for a long period as well. Say they can do it for past 6 years as well. So past 6 years, when they do the search and seizure now, the past 6 years data will also be subject to the returns again. So we'll have to file the IT returns again. So when you file an IT return again, and you determine that there is some undisclosed income which was not disclosed earlier, but we are disclosing it now. In such a scenario, a new undisclosed income gets identified. So when such an undisclosed item income is identified, you cannot offset any of the depreciation or any of the brought forward losses against that undisclosed income. So what is your task? So your task is to see whether any assessment orders or anything is passed in the previous year. That is the first aspect. So while doing that verification, you'll also verify if there is any search or seizure done during the previous year. If there is any search or seizure and has the client accepted any of the undisclosed income, you have to identify. Suppose there is an undisclosed income which the client has identified and accepted it, then you cannot offset any of these amounts against that undisclosed income. So the auditor is responsible to see whether they have done any set off of the brought forward losses against such undisclosed income. Is it clear? Any doubts in this clause? Yes, John. So it is clear. So basically, you got an idea, right? Like what is being asked in the clause. It is only a small table they are asking it here. So as per this table, you will start filling the data, and these precautions you will be taking care. So in the same 32, there is clause B to E. In this clause B to E, they have started asking additional data. So what is this that additional thing they are asking? As per section 76. Any idea what is section 79? Any idea what is section 79? Section 79, no? This section 79 talks about one particular aspect. So what is that aspect is you cannot carry forward the losses of the previous year if it is a private limited company and more than 51% of the shares have got transferred to a new person. So if the particular company's shares have got transferred to a new person of more than 51%, then this section says that you cannot carry forward the losses, whatever that is accumulated previously, to the current year or to the future years. That is what this section talks about. There is an exception for this. Exception is that, see, in startups, what happens usually in startups, the main founder would have started the company, but as and when the funding happens, say it will go to pre-seed. In the pre-seed, they will issue some 5% shares to the seed, the person who is funding us. So 5% stock or 10% stock is gone. And suppose that pre-seed also is successful, they'll go to Series A funding. So when they go to Series A funding, the Series A funder may ask for stake in the company. Say they will ask for 20% each. Say two, three funders have come in. So in this scenario, what will happen? The equity, whatever is there by the founders, gets transferred to the funders, Series A funders, Series B funders, and things like that. Once it gets transferred, what will happen? This section gets impacted. So when this section gets impacted, what will happen? Suppose in most of the startups, starting years, they'll be having losses only. Have you guys seen the balance sheet of Zomato? Anybody has seen the balance sheet of Zomato? So John says he has not seen. Rakesh says he has not seen. So what has happened? Zomato was not able to break even at all for many years. But even then, it has come to the funding stage, into the IPO stage. So in like this manner, every startup will be having a lot of carry forward losses. So when such loss amount is there, they have to carry forward it. Yes, sir. So if they don't carry forward it, what is the problem? Whatever loss, say for example, they may have 1,000 crores loss sitting there. In the next year, they earn some 500 crores of profit. Usually, what will happen will knock off the previous year losses with the current year profits. So if this section gets triggered, whatever is the 1,000 crores loss which is sitting in our balance sheet will be lapsed. When it get lapsed, what will happen? That amount you cannot use it at all. So 50 on 500 crores of profit, you'll end up paying taxes. So in that way, this section is impacting all the startups. So what the government did one activity. They said that if you are an eligible startup under Section 80 IAC, then you can carry forward the losses irrespective of the condition of 51%. Is it clear, guys? So this condition is not required. This 51% is not applicable in case the company is an eligible startup. Is it clear? Any doubts here? Yes. So So in this way, clause B, they are asking if there is a change in shareholding. This is applicable only to a private limited companies, not to a public limited company. So in such scenarios, 51% is changed or not, we have to report it. So what does the next clause say? Next clause says that details of speculation losses or deemed speculation losses incurred in the previous year, then if any. So or if the company has got, if the entity has got any speculation losses. What is the speculation losses? Any idea what is speculation loss? What is speculation business basically? What is speculation business? Trading in shares, partially, right? Anyone else? What is this speculation business? Speculation loss or anything? Rakesh is telling that which does not involve delivery of securities. That's right. So speculation means there is an underlying commodity based on which you are doing the trading, but the actual delivery of it will not happen. So what will happen? You'll buy the product in the morning and sell the product by end of the day. So what will happen? Buy and sell say happens in the same day. So the delivery will not happen at all. So in such a case scenario, say it is a intraday transactions and things like that, it is called as speculation business. So in the speculation business, if you have incurred any losses, it can be carried forward only for 4 years. And further, the speculation loss can be adjusted only against speculation gains. So this kind of transactions or this kind of conditions are there for speculation losses. So therefore, the income tax department wants us to inform whatever is the speculation losses separately under this clause. Is it clear? Is the reasoning clear? Why they are asking this information? Can you please respond in the chat box? Yes. So similarly, the next clause is details of specified business losses. Similarly, there is something called specified business. Example of it could be cold chain facility, warehouse for agricultural products. There are many other categories in this specified business. So if you are doing a specified business and you have incurred any losses in the specified business, then you can offset only against the specified business profits. So therefore, the government or the department wants us to report this information separately again. I hope it is clear. Let's go to the next clause. The next clause is deductions. See, under this deductions, the auditor in this clause has to give section-wise deductions under Chapter 6A or Chapter 3B, and it should be updated here. So they are asking us to give us section-wise deductions here, not chapter-wise. They are just giving under what all sections are coming under this chapter. They are asking us to do a section-wise disclosure. So coverage could be like examples like 10A means to chapter 3A, only two things are there, 10 and 10A. 10 is free trade zone related entities and 10 AA is SEZ related entities, special economic zone entities. So if this type of benefits you are taking, then you have to give the deduction specifically under each section, under each chapter. And what could be the chapter 6A deductions? So chapter 6A deductions examples like 80IA, 80IB, 80IC, 80JAA, 80G and etc. Like this, they are asking you to show what is the deduction that you are trying to claim under each of this section. So what is the care and precaution that you should take? So what you should take is verify the books of accounts and check the relevant expenses or incomes. So first you have to check whether there is relevant expenses, which is specified in the respective section. Whether there is any specified income, which is specified in the respective sections. That you have to do the ground check first. You need to verify if the client is eligible to get deduction under the respective sections. So you have to see the conditions that is mentioned under each section. Say you will go under 80G. 80G means what? You have to pay a donation. Yeah, then what is required? You should have a donation certificate issued by the NGO. That details whether it is there or not. Like that, for every section, wherever we are claiming any benefit, we should verify and see whether the conditions are getting satisfied or not. The next thing is whether the relevant reports are obtained in support of deductions claimed. Say, suppose 80JJAA, where they are recruiting new people to your office and business. In that scenarios, they are asking that you should have a separate chartered accountant's report. So, have you obtained such report? Is what they are trying to ask here. So, all these checks we should do it before disclosing any information under this clause. So section 50, 115 BA, BAA, BAB, BAC, BAD, BAE, all these clauses, no, it is all beneficial or lower tax rate sections. So suppose you choose the benefit under this section, then your tax rate gets reduced. Is that all? Also, your beneficial provisions will go. So when your beneficial provisions goes, whether you fall under this category, so suppose you have claimed under 115 BAC. So if you go under 115 BAC, you're not eligible to claim additional depreciation and things like that. There are many conditions which is specified under each of these clause. So you should not claim certain deductions. So have you claimed any deductions is what you have to check here. So what is it here? There are three things here. First thing is the client claiming this deduction? Then is it falling under this category? Then report it. Second thing, is the conditions under the respective sections complied or not? That you have to check it. Then whether relevant reports the client has obtained or not, you have to check it. Then lastly, you should check whether they have opted for lower taxation and also claiming these deductions, because it will be double benefit. They should not get that kind of benefit, right? So these are the verifications that you have to do it. Is it clear? Can you answer in the chat box? Okay, Rakesh says it is clear. So let us see these clauses once before we go to the next slide. From 32B, we will start seeing it. See 32B, what does it say? Whether there is a change in shareholding has taken place in the previous year due to which losses incurred to the previous year cannot be allowed to be carried forward. Say shareholding pattern has changed, then you cannot take it forward. Whether the assessee has incurred any speculation loss, whether the assessee has incurred any specified business related losses. Say in case of a company, please state whether the company has a deemed to be carrying on any speculation business. Then if yes, then loss is there means those details you have to disclose it. Hope 32 is clear. Let us see 33 one now. Section-wise details of deductions, if any, admissible under Chapter 6A or Chapter 3. See, they are asking only two chapters. Chapter 6A and Chapter 3 only they are asking here. So one is Section 10A and another one is Section 10AA. So these two things they are asking here under Chapter 3. And Chapter 6A, as we all know, it is a very big list. Say 80G, 80IA, 80IAA, 80JJ, 80JJA, like that many sections are there. Each section wise you'll put the amount here and amount admissible as per the provisions. And whether the respective conditions are satisfied or not is what we have to put the things here. Is it clear? Any doubt here? Can we go to the next slides? Can we go to the next slides? Yes. So now we are coming to a very important clause. The whole tax audit revolves around this clause only. So if it is tax audit means there is a lot of work is involved. People will always tell, right? Why is it only because of this clause 34? What is being asked under this? They are asking many things here. TDS deduction related details they are asking. TCS collections also they are asking here. So all these things they are asking here. Okay, what do they ask further? They're asking the TAN number. This is very easy. We will put it. They're asking section. Okay, section also will put it 194C, 194J, or 206H, whatever it is, we'll put it. Nature of payment is also okay. Total amount of payment or receipt in the nature specified in the column. So what they are asking is what is the payment that you have made, which is in this nature they're asking. So what does it mean? Suppose it is 194C that I'm putting here. So all contract related payments they are expecting to see in column 4. Is it clear? All the contract related payments that is there in my profit and loss account should be updated here. Is it clear? Any doubt in clause in column 4? Okay. So what is the nature we are telling in column 3? That nature related total payments we are putting in column 4. Okay, now what is this column 5? Total amount on which tax was required to be deducted or collected out of 4. So now this nature is fine. Nature is absolutely fine. Now in this nature, on which amount or on how much amount is the TDS applicable they are asking. Suppose there is a 1 lakh rupees payment which is made here to two vendors. So here, out of this 1 lakh, the whole amount is subject to this TDS, or is it a smaller amount? Is what they are asking here. So let us see a practical example once, and then we will understand it in much detail. Now let us see the headings in brief and go ahead, and we will do a practical exercise and find out what is being asked here and how to fill this data. Total amount on which the tax was deducted or collected at specific rate out of 5. Suppose I say that 50,000 rupees out of this 1 lakh, there is 50,000 rupees on which contract TDS is applicable. So on this 50,000 rupees, what is the tax that I have deducted is, is what they're asking in this clause 6. Now further what they're asking, amount of tax deducted or collected out of 6. Suppose I say that out of 50,000, 1% has to be deducted. Say 500 rupees. 500 rupees is the TDS that is payable. So what is the amount that I have paid, have deducted and collected? I have deducted 500 rupees. That amount should come here. Total amount on which tax is deducted or collected at less than specified rate out of 7. So is there any lower deduction is what they are trying to understand here. Sometimes what happens, the assessee will go and approach the income tax department and say that my incomes are very less. Please don't do higher TDS, they will tell. For example, a professional is there. Professional will get a TDS of 10%. But actually that professional is not making good profits. So he'll tell that actually my profits are very less. If you do 10% TDS, then my money is getting caught. So what they'll go and approach the income tax department and ask for a lower TDS deduction certificate. So the department will evaluate the situation and give a certificate. So if they give such certificates, then based on that certificate, you will do a lower TDS. Instead of say 10%, you might do say 1% or 2%. So in that scenarios, they are asking here if there is any lower deductions, which is less than specified rate, then you have to put it here that amount of tax deducted or collected on 8. So that lower amount is there. No, in that lower amount, have you collected full or not? They are asking here. Then what is this last column? Amount of tax deducted or collected, not deposited to the credit of the central government out of 6 and 8. See here, you have told that this is the amount that has to be deducted in 6 and 8. Have you not deposited it is what they are asking in this column. Now, is the headings clear in all these 1 to 10? Is the headings clear? We'll see a practical example and then understand it much better. Is it clear? I want more responses. Yes. So let's go to the next slide. Let us do a practical example and jump back. So this is a profit and loss account extract in our case. So in this profit and loss account extract, what is there? 25 lakhs amount is there as paid as salaries. Contract laborers, we have paid 3 lakh rupees. AMC, we have paid 1 lakh rupees. Audit fees, we have paid 50,000. Legal charges, we have paid 30,000. Rent, we have paid 3 lakh 60,000 rupees. And this is the breakup of the payroll. Is it clear? Is the facts clear? Yes, fact is clear. Abhishek, you have got a doubt. Will answer it after completion after completing this example. So let us see the table. See now what is there. We are putting the TAN number. So in TAN, what could be the situation? Some organizations may have multiple TANs. If they have multiple TANs, then TAN-wise reporting is necessary. Say in each TAN, all these category bifurcations you should be giving it. So now let us see. Section 192. So in this, out of my all my expenses, salaries fall under 192 category. So first TDS section that is applicable is 192. So what is the nature of payment? It is salary. So I'll write salaries. So total payments of specified nature. What is the total payment that I have made? 25 lakh rupees. So this 25 lakh rupees is what I have to report here. Some liable to TDS. Out of this, how much amount is liable to TDS is what they are asking here. So now to answer this, we should know that we should have the breakup of the salaries. So if you see here, 12 lakhs is there and 9 lakhs is there. Should I have to do TDS for both of them? Yes or no? Can you answer, please? Should I have to do TDS for Ramesh and Suresh here? Yes, yes, that is right. So I'll have to do TDS for both of these people. But should I have to do TDS for Rakesh? No. I want to see more answers so that it will be more interactive. That's right. Why means the under the new regime, if you see, the tax will be applicable only if the amount salary is more than 5 lakh rupees. So with the information that is available with us, for the first two people, tax is applicable and we have to do the TDS. For the next person, TDS is not applicable. So in this scenario, 25 lakhs is in the nature of salaries, but what is liable to TDS is only 21 lakh rupees. So how did I get 21 lakh rupees? I've added 12 lakhs and 9 lakhs to get 21 lakh rupees. So sum liable to TDS is 21 lakh rupees and some TDS at specified rate. See, specified rate is what will be applicable for other than salaries. But for salary, as far as salary is concerned, what is the slab rate? As per the slab rate, have we deducted the TDS or not? So in our scenario, let us take an example that TDS is correctly deducted. So sum liable is 2.21 lakh rupees and TDS on that is, for example, 1.5 lakh. So this whole amount we have deducted and we have withheld. Is it clear? Is it clear? Can we go to the next example? Yes, so let's go to the next example. The next category is 194C. So how many do I have here in the nature of 194C? Is there is two transactions. AMCs also get categorized under 194C. Yes or no? So it was so whatever is the expense ledgers, all those ledgers in the nature of 194C, then we have to put that amount here. So it is not just 3 lakhs. I have to put 3 plus 1. That is 4 lakh rupees is the total amount which is specified in the nature. Is it clear? There can be any number of ledgers, but we should add all of them and put the amount here. Is it clear? The total payments of specified nature, whenever we say that we should analyze the whole P&L account and see what is the amount that is coming here in that nature, and we have to update it here. Is it clear? Any doubts here? Any doubts? Can you please respond? Sorry, there was an issue in the Zoom. Yes. Can you see the screen? Is it clear?
Yes, sir.
Yes, sir.
Okay, thank you. So, the point that we were driving is that there could be n number of ledgers. Say there could be another x, y, z also. But all the ledgers which is in the all the expenses which is in a certain nature, all that we should try to group it and put it in this place. So this is a very tedious task. So you have to go through all the ledgers in the profit and loss account and your balance sheet also in some times, and you have to categorize these expenses into these buckets. So once you categorize it, then you will start seeing whether that amount, all those expenses, whether on that TDS is applicable or not, you will be seeing it here. So in our case here it was 4 lakh rupees from two ledgers. So that 4 lakh rupees we have put here, and some liable to TDS also is 4 lakh, for example. In this case, we have done TDS on only 3.5 lakhs. So what is the TDS that we have done? 3,500. So now we have not done the TDS on 50,000. What is the consequence? Can you answer in the chat box? What is the consequence? Actually, 4 lakhs is liable. Some liable to TDS is 4 lakhs. But TDS at specified rate, I have put only 3.5 lakhs here. Now, what is this differential? What is the impact of writing a lower number in this column? Any guesses? Can you write your guess in the chat box? John says interest should be charged. Others? Standard deduction? No. What about others? Threshold limit? No. So let me explain. So here what happened, this 4 lakh rupees is a sum of specified nature. Yes or no? This is of the sum of specified nature. In this, in our example, even 4 lakh full amount is liable for TDS. So when I write an amount here as 3.5 lakhs, what is the heading here? TDS at specified rate, TDS at specified rate. Now under this heading, what is the subheading? Sum liable and the TDS amount. So here, whenever I write 3.5 lakhs and the related TDS amount here, it means to say that 50,000 rupees is the disallowance. So when it is 4 lakh rupees and we have only 3.5 lakh rupees as on which we have done the TDS, then in such a scenario, it will consider the differential amount as a disallowance. Is it clear? So when the addition of G and I, addition of G and I should be equal to H. F. If this amount is not totaling up to this amount means, then there is a scope for disallowances. Is it clear? It is not interest, it is not standard deduction, it is not threshold limit also. Is it clear? Yes. So now, in this scenario, what happened now? 3.5 lakhs is coming here. And say, let us take another example now. Let us extend it. Say on 30,000 rupees, one of my vendor has given a lower TDS reduction certificate. He says that instead of doing 300 rupees TDS, you can just do 150 rupees TDS. Now, what is my disallowance? Can you answer in the chat box? What is the disallowance now? What is the non-deduction amount? Yes. Yes, Murthy, that's right. So 20,000 rupees will be considered as the amount on which we have not done the TDS. So we are not explicitly telling that we have not done the TDS. But when we are filling this table on the amount that we have done TDS, when we are telling that, what is the difference amount on that we have not done TDS? Indirectly, we are telling the department. So that amount, you should be careful and you should cross check with the other clauses of the 3CD. In the other clauses, they'll be asking many other details. So one of the details in the one of the clauses, they'll ask what is the disallowance. So this 20,000 disallowance should be matched with that. So are you getting the point? This table has got connections with multiple clauses in multiple places. Is it clear? Can we go to the next example? Yes. So let us take the next example. So now the next example is professional fees. See here what is happening. Out of all these ledgers, audit fees and legal charges are qualifying for the professional charges. Yes or no? And in this legal charges also, suppose there are two lawyers. Then what will happen? Sum in the specified nature is 80,000 rupees. I'll add both of these. Yes or no? Is it clear? Are you understanding the flow, how the work is happening? Yes. So 80,000 rupees I have put here. But on what amount TDS is applicable? See, when it is two lawyers getting paid payment of 30,000 rupees means it is less than the threshold. So, so when the threshold is not crossing, then TDS is not applicable for that. Now, only on the audit fees TDS is applicable. So here sum liable to TDS becomes 50,000 rupees. So what happened? 80,000 rupees is the sum in the specified nature. But on what amount TDS is liable? Only on 50,000 rupees. So on this 50,000 rupees, we have done the TDS also. So sum liable is 50,000. At the specified rate, we have done a TDS at 5,000, 10%, which works out to 5,000 rupees. So is there any doubts? In this clause, what did we learn? In this clause, we learned that sum liable to TDS could be less because of various reasons like threshold and other reasons. In this clause, what did we learn? Whenever this sum liable to TDS is there and the sum on which the TDS is done, there is a shortfall, means that amount is known as disallowance. That amounts will qualify for disallowance is what we have learned. In this, what did we learn? In this, we learned that threshold, due to threshold reason, the sum liable could be less. Is it clear? Till here, is it clear? Yes. So now let us see another example. In my profit and loss account, there is an item called rent. The rental amount that I am paying is 3.6 lakh rupees. So when I am paying 3.6 lakh rupees, the whole amount is subject to TDS. Yes or no? Since it has crossed the threshold. Yes or no? Yes. So since it has crossed the threshold, the whole amount is liable for TDS. And in this case, what happened? My owner has given me a lower deduction certificate. So when I get a lower deduction certificate, I will put the amounts in the next column. TDS at lower rate. You can see here. This is specified rate. This is lower rate. So when there is a lower rate, then I'll have to fill the details in the next columns, not in the first columns. So here I will tell that what is the sum liable, the whole amount is liable to TDS. And what is the TDS that I have done? I've done at 5%. If you see here, I've applied 5%. So here, what am I disclosing here? One thing that I'm disclosing here is it is done at a lower rate and lower rate of amount also I'm disclosing it here. So in this way, you should disclose the transactions where the client has given any lower deduction certificates. We have to disclose that here. In this audit example, there is an extension here. Suppose this amount is actually 5,000 rupees, but I have not deducted and deposited to the department. It is deducted but not deposited to the government. So now what will happen? I'll have to disclose that amount here. Then what will happen? Automatically interest gets charged here. So this is subject to interest. Is it clear? Are we clear with all the columns here? Okay. So now let us see an example. My total rent amount is, say, for example, my total expenses is 33 lakhs, for example. So in this 33 lakhs, is all the amounts coming here? 33 lakh 40,000 rupees. It is coming here. So all the amounts are coming here. That is first point. So this type of reconciliations is required actually. So suppose there is another freight and carriage. So in this freight and carriage, say I'm paying 10,000 rupees. Is TDS applicable on this? Can you answer in chat box? It is a coolie charges, for example. Let us take it is a coolie charges. Is it applicable? Is TDS applicable on that? Threshold not attained. Threshold not attained is what I have got answer from John. Say it is coolie charges. Is TDS applicable on that? Say let us take another example. I have paid for food and snacks. Say I paid 15,000 rupees. It's applicable on this. Not applicable. I want to see more answers. TDS is not applicable. Abhishek says TDS is not applicable. So like this, when you see the total amount here, this amount versus this amount, you have to have a reconciliation. What is the amount that is there in my total expenses? It is 33 lakh 65,000. Now what is the amount that I have reported here? 33 lakh 40,000 rupees. So 25,000 is my difference. And what is the reason for this 25,000? 10,000 is my coolie charges, for which TDS is not applicable. And there is another 15,000 rupees, which is food and expenses. So like this, I need to have a reconciliation of total amount that is there in my P&L account and the amount that is getting reflected here in this sum in the specified nature. Subsequently, I should have a reconciliation for all the differences in these columns as well. So now what is the next difference, that reconciliation that we should have? See, this 33 lakh 40,000 is my total expense. 29 lakh 10,000 is the sum liable to TDS. Can you quickly tell me the reasons? Can you quickly write the reasons in the chat box for the difference for breakup for this 4.3 lakhs? Yes, Rakesh says it is threshold. So in case of salaries, I've got a I've put 40,000 rupees, 4 lakh rupees because basic exemption limit. And in case of legal charges, it is 30,000 rupees. Like this, I have to have a reconciliation for all the differences here. Subsequently, further, it just not stops here. The next reconciliation is what is the amount that is subjected to TDS and what is the amount that is not paid for TDS. So what is the amount on which I have done TDS? 2 lakh, 28 lakh, 90,000. What is the amount on which I had to do the TDS? Now what is this 20,000 rupees? What should be this 20,000 rupees? Yes, this 20,000 should be subject to disallowance. That's right. Satish and Sumitra, you guys are right. So in this way, we should have reconciliation for every item and we should have related working papers. It is not our job does not end with just filling this table. We should also have the related working documents and have reason for all the differences. Is it clear? Is it clear? Any doubts means you can ask here. We can take two more examples if needed and understand it better. Yes, it is clear. Sumitra says it is clear. So let's go back to the slides now. So what are the pointers? Let us see the pointers. If there is multiple tan means under each tan you should start doing this exercise. So that will be a tedious thing. Most of the cases the clients will have only one tan and it will be very easy to do it. So our books of accounts will have multiple tans means say for example books of accounts is comprehensive. It will have say three tans. So all the three tans will be there. So further for each tan we should do this kind of exercise. So you are able to understand the disclosure is like in books of accounts, say 30 lakhs is there. There are three pans, for example, 10 lakhs, 10 lakhs, 10 lakhs. Like that, whatever is the respective amounts, you have to do the calculations and you have to show separately. Each section will come under each tan again. Yes, John, you have a doubt?
Yeah, sir. This happened with one of the clients that I'm working with again. So there is an expenditure, say it is commission,
Okay.
but in the books they have classified it as professional expenditure.
Okay.
And then while deducting TDS, they have deducted under commission only.
Okay.
So ideally there is nothing wrong here.
And
And then
from IT
in
perspective, there is nothing wrong.
yeah, and then later they wanted to reverse the commission ka TDS because it is not even applicable.
Okay.
So while reversing the TDS, they have reversed it in professional TDS ledgers instead of commission.
Oh.
So like this, if it happens, how do we deal with this or how do we resolve these issues?
See now, first thing, let us go to our examples so that it will be more clear. So while doing the TDS, they have done it under professional fees, no, under the commission.
Yes, sir.
So commission, say for example, it was 10,000 in the specified nature. Say 1 lakh, let us keep it 1 lakh. They did a TDS on that, 5% TDS is applicable. They did 5,000 rupees. But later, while reversing it, they have reversed it under professional. So what happened to a professional? It became negative now. Minus 1 lakh and minus 10,000. So this is a pure mistake, I would say. This is not a right thing. It's not a right treatment. So what is the solution for this means they should revise their TDS returns. So if they don't revise their TDS returns, the problem does not get solved. Why means reason is that you have given only 5,000 as a credit to the party. Now you are giving you are taking back from that party 10,000 means it is not right. So there is a mistake. And secondly, the next clauses of this 34, it asks for accuracy of the TDS returns also. So if it is inaccurate, then we will have to report it also. So why to give a negative report to the client? So always the best practice is that the CAs will suggest the clients to do the TDS revisions, and once the revision is done, they will start they will start filling up this table and issue a report, TDS report, a tax audit report. Is it clear, John?
Yeah, sir, clear.
Okay. So in that way, you can solve it. So how to compile data? So data is, as we saw, it is there in profit and loss account. And John told that he has seen a scenario where the classification itself is wrong. So usually what will happen if our ledger name in this example is professional charges, when I say it here, audit fees, then I understand only audit fees expenses goes there. Now, if you say it is professional charges as a ledger and you see there is a commission payment going there, first and foremost, the classification of the ledger is wrong. So that should be corrected. So it should go to a commission ledger. So in that way, every ledger will start scrutinizing every payments. So if, for example, in this legal charges, there are two payments. Say it is 10,000 rupees paid to one lawyer, 20,000 rupees paid to another lawyer. Then for each of these line items, I will start seeing and categorizing it. What is the nature of section that is applicable? Here I'll put 192. Here I'll put 194C. Here I'll put 194C. Like this, I'll start categorizing all the transactions based on the nature of expenditure into the respective buckets. So in that way, I'll start compiling all the data. And once the data is ready, I'll start filling in the table. So what is the sum specified nature? All this we discussed. Non-deduction of TDS also we discussed. Lower TDS treatment also we discussed. So let us see, there are few pointers here. Important pointers. We should know this payment made and not just expenses in P&L account. See, this is a very important point. In my profit and loss account, I can see only 33,65,000. Yes or no? Yes or no? So we can see only 33,65,000. Now what happens? Actually, I made an advance payment to another lawyer of 50,000 rupees. Now, is this coming in my P&L account? This is an advance payment. Is it coming in my P&L account? No. This, where will this come then? This will come in my balance sheet under creditor advances. So this is not coming in my P&L account only. It's an asset. So this amount, whenever such amounts are there, we should also keep in our mind that it is not just P&L scrutiny that we have to do. We should do the scrutiny of the balance sheet also. So that is what we are trying to drive here in this point. We should also see the balance sheet items, not just P&L items, for the applicability of TDS. Why? The section says that they have to do the TDS at the time of credit or payment, whichever is earlier. So I have made the payment now. Therefore, I have to do the TDS. Is it clear? Is it clear like why we have to do the balance sheet analysis also? Yes. So in this way, we should do the balance sheet analysis also and incorporate those data also into the 34A table. Some cases, TCS will be applicable by the vendor. TDS may not be applicable in such cases. See what happens when I am buying some goods, I may have to do TDS newly because of the newly inserted section. But also before that section came into picture, there was something called TCS. So whenever a person is making sales above a certain threshold, then they have to do the TCS. So when TCS provisions is applicable and they have already done the TCS, then in such scenario, TDS may not be applicable only. So you should understand the interplay between TCS and TDS and see what is applicable, what is not applicable. So in the same section, they'll also tell that TDS provisions will override the TCS provisions. So in such a scenario, what happens? TDS will prevail, TCS will not prevail. Though I might be selling some products to my customer above 50 lakh rupees during a financial year, I may not be necessary to do the TCS since my customer is doing a TDS. So in that way, you should know the interplay between these sections and apply that accordingly in this while filling this table. And further, this table is not just for TDS. Even the TCS data also gets captured here. If you see here, this whole table talks about TCS only. The clause is very uniform and it is a very generic. But if you see here, this table, it is asking for TCS information separately. So TAN number, related TCS, all those details will be giving it in a similar fashion. So what is my sales that is done during the previous year? What is the amount that is liable for TCS? All the sections, all the headings will flow in the same logics, same way, but this is how it will be. So you should understand the interplay of TCS and TDS and accordingly apply those logics here. See, something new has come in the current year. What is that 194R? What is this 194R? Any idea? Can you guess what is this 194R? Can you answer in the chat box? That is right. Murthy says that business perks. So this is like perk visits or benefits, which the person is getting. So basically, suppose let us say we are in a pharmaceutical industry. So in the pharmaceutical industry, as I'm a pharmaceutical industry, I want to promote my medicines to the doctors. So what I will do, I will go and approach all the doctors and spread the word of my medicine. So this happens usually in the pharmaceutical business that doctors have some expectation from the pharmaceutical industries. So the pharmaceutical industry books some, say for example, books a travel ticket to the doctor. So now this travel ticket is actually you will tell that it is a traveling expenses in your profit and loss account. But what will happen? It is actually a benefit or a perk visit given to the doctor. So, as per after this section got introduced, section 194R came into picture. And this 194R says that whenever such amount is given as a benefit to the doctors, you should do TDS on that, it says. Now it is travel ticket, we can somehow guess it and identify it. What if they have given some extra medicines itself to the doctor at free of cost? Is it identifiable? Is it identifiable? This nature can be sitting anywhere in the P&L account. It can be travel expenses, it can be food expenses, it can be boarding charges, it can be giving medicines, additional medicines to the doctor, it can be booking a hotel in a foreign country, or anything for that matter. It is not easily identifiable. So when it is not easily identifiable, there is a risk for the auditor. What is that risk? What if the client has not done TDS and he says that he has done TDS? So there is a risk for auditor by because the client has not done TDS. Say the amounts, the turnover of the company is say 200 crores and benefits of perquisites of this nature is sitting in 10 crores. Can you just ignore it? It cannot be ignored because the amount that is involved is huge. It is material. So therefore, what is the solution for this? So what is the solution that is suggested is to obtain management representations. So what representations will take from management? Will take from the management telling that the whatever is the benefit or the perquisites that is given to our customers or our vendors, that amounts for all those amounts we have done the TDS. Like that, we'll have to obtain a TDS declarations from the management and accordingly close the tax audit report. Is it clear? Any doubts here? Murthy Kannan is asking, are free samples covered in 194R? See, samples is not a benefit or a perquisite that is given to anybody. So sample is just to see, feel the product. That is why you are giving it. So that will not get covered here. It should be any benefit or perquisite should be there. And moreover, in case of free samples, what the usually the pharmaceutical industries will do is they will put a label telling that This is a sample product, not for sale, and they'll not put the MRP also. Is it clear, Murthy? Is it clear, Murthy? Is the point clear? Welcome. Then the next point that we discussed is the lower TDS, lower deduction certificates. Sometimes our vendors start giving us the lower TDS deduction certificates or no TDS deduction certificates. We have to maintain all these documents. We have to maintain these documents. We have to have our working papers. We have to create documentations. We have to keep everything ready for filling up this table. Is it clear? We'll go to the next pointer once you say it is clear. Okay, Satish, what if the client does not have lower TDS deductions? See, whenever you are doing the lower TDS, then before doing that, you should collect this certificate. If you don't collect this certificate, then you are not eligible to do a lower TDS at all. So the client may say that, sir, that client told that they will give the TDS certificate later, but they did not give it. So in such scenario, what to do? In such a scenario, you'll have to ask the client to do the TDS, extra TDS, and recover it from the clients. Works given to employees covered under 194R. See, no, it will not get covered. No, see, whatever purposes or benefits that you are giving to employees is already getting covered under 192. See, for example, the sections are very exhaustive. I can give an example of rent-free accommodation. There is no rent that is payable by the employees, but an accommodation of the office is given to the employees. So in this scenario, what will happen? It is already covered as a perquisite in section 192 and TDS is already done. Another example could be your RSU, restricted stock units. It is not actually vested or given to the employees, but still they have got the benefit of it. So in the year in which they are getting the benefit, in that year they will get taxed for that. Is it clear? Can we go to the next slide? Yes. Thank you, Rakesh. So let's see the next slide. There's an additional pointer. So as I told you, reconciliation of amount of as per books of accounts and amounts on which TDS is required to be done. Like this, whatever reconciliations, as I told, as we discussed, should have all those reconciliations and keep it ready as a audit documentation. Okay, so the next point is clause 34B, TDS returns. See, this 34 talks about all the TDS returns only. TDS, what is the TDS deducted, not deducted, and things like that. This clause B specifically talks about the returns. So whether the return is filed properly or not, whether there is any mistakes in the returns, all those should be identified and reported under this clause. So it's just not TDS, it also includes the TCS returns also. Suppose there is a TCS returns, we should update the TCS returns here. So TDS returns and TCS returns filled properly or not. Table 34A and 34B should be reconciled with disallowances under section 48. So this is a pointer or the what is required. See, this just filling this, everybody will do it. But what is needed? What is the background check or the other checks that you should do and keep it at the background? So that check is this 34A and B reconciliation. Suppose, let us take the example. Sum liable to TDS is what here? 29 lakh 5,000 rupees. Yes or no? Now, what is the check that is needed here? Return details. Say here it is form 26Q, 24Q, all the returns put together here. What is the amount that has been deducted here? That amount versus this amount, you should do a cross check. So how to do those cross checks also? See, usually what we will do it is we will download the TDS dump from the traces portal. So once we download the TDS dump from the traces portal, we'll import into your respective softwares, whatever it is. For example, you import it to Saral TDS software. That TDS file gets completely imported, and you can generate a DQR report. Once the DQR report is generated, you will start seeing what is the amount on which TDS is deducted as per the return. That you will cross check with the books of accounts. Now, is this cross check necessary? Can there be differences? There can be possibilities, that's right. What is the reason means, say for example, you have passed an entry after the filing of the returns. Say you have passed an entry of, you have booked an expenditure, backdated expenditure, you have booked it in the month of March. A new lawyer bill came in the March month. You have done the past the TDS entry also for that transaction, but that is not reported in your TDS returns. So therefore, it is very much necessary for us to do a reconciliation between the TDS returns and this table. Is it clear? Is it clear? This is one of the situation where you can see difference. John, would it be possible to show any template you follow for this reconciliation? Only if it's possible. Actually, that template, what I'm telling you, John, that template is what is your actual working papers. So as I told you here, it all starts from the balance sheet or the profit and loss account. So your profit and loss account will be there, and then a TDS working tables you will start here. So as in when you start doing your work, next to each ledger you will start writing TDS is applicable, not applicable, exempt amount, not in specified nature. All that amount, all that transactions or the remarks you will start giving it. That remarks becomes their reconciling items. Then lastly, you will do one reconciliation statement, total amount that is there in the P&L account, total amount that is there here, and you'll just write down the reasons that you have noted down here. So this should be more usable way, I feel, because every entity, there will be a different ledgers, there will be a different transactions, there will be different nature of payments. So this is a methodology that you can adopt to do this kind of reconciliations. So going back to the section, so what is that? That reconciliation you should do between the TDS returns and the 34A table. And whatever is the difference that you are getting, that should match with your disallowance under section 40A. Is it clear? If there is any difference, that difference should match with to our 40A disallowances. Is it clear? So in this way, you should do the reconciliation and keep it ready. And suppose there is some mistake in the TDS returns and client is willing to do the changes, do the corrections, well and good, then you can do it here. You can do and update the updated version or the revised return details here. Suppose client is not ready to do the revisions, what you will do? You'll have to do a qualification here. You will start telling that the report file is inaccurate. So what is that is being asked here? TAN number, form number, quarter, due date, date of filing. Is the return, if the return is inaccurate, details. So if the return is inaccurate, you'll start filling up the details here. Actual TDS returns should have been so much, but they have filed TDS return for a lesser amount. So therefore, the return is inaccurate, and things like that you will start uploading it here. So once you upload and put the details here, it will automatically get picked up for the scrutiny, and the client will get a notice. So therefore, you should be very careful that you should give a very minimal chances for putting anything here. So maximum you should try and get it sorted with the client by explaining them the consequences and doing the necessary correction returns. Is it clear? If supplier issues a composite bill for two nature of services, each being TDS and a different rate, how to handle it? You should break that amount, no? You should break that amount, that expenditure. Basically, you will do that breaking up while accounting itself. Suppose there is a freight charges, transport charges, and there is also a purchase of goods. So on purchase of goods, you are doing TDS under one section, and for the freight, you are doing TDS under another section, for example. So in such a scenario, you'll always bifurcate that into respective ledgers. So this problem automatically gets taken care of. Is it clear, Murthy? Is it clear, Murthy? Yes. So let's go to the next slide. Interest payable, if any. See what happens. Sometimes the TDS may be deducted but not paid. Yes or no? Have you seen this type of situation? TDS deducted but not paid. You have deducted that amount from the vendor, but you have not paid to the department. Have you seen it? Can you answer in the chat box? So many times. So in this scenario, TDS deducted but not paid. What is the interest rate that is applicable? Yes. So 1.5% TDS is interest is applicable, not 1%, Satish. The TDS that is applicable is TDS in cases where TDS deducted but not paid to the government is 1.5%. In cases where TDS is not deducted, not paid, then it is 1%. So you got the difference, like when TDS is not deducted and not paid, then it is 1%. So in this way, you'll have to do the interest calculations. And also sometimes, as you guys know, while filing the TDS returns, always we will pay interest for one additional month. Suppose TDS was supposed to be done, the transaction was there in February month, you have to do TDS in the month of March. Suppose you have missed on 7th March and you are paying it on 8th March, then how many months interest will you pay? Can you answer in chat box? John says 1 month. Vasant says 1 month. The actual true answer is 2 months. Why? The government will apply its original rule telling that you should have deducted and paid it long ago. Should have paid it in February itself. Why you are paying it in March? So February also interest will be charged. March also interest will be charged. So in that way, you'll have to pay the TDS for 2 months. So the client might have done for 1 month, but immediately if he has done it for 1 month, they will get a income tax notice from the TDS department. So to avoid that and to comply with the provisions of the act, we'll have to do the TDS for interest. We'll have to pay interest for 2 months. So in such scenarios, in such other scenarios, what will happen? Interest computation as per auditors will be X amount, as per client may be Y amount. So there could be scenarios where this interest that we are telling as per the act is higher and what is already paid is less. So in such scenario, what will happen? We'll have to report it here telling that interest that is paid is less and interest that is payable is higher amount. And accordingly, we have to make the client make the payment, or if not, what will happen? It will get picked up for the scrutiny or a notice will come to the client. So is it clear? So this clause, we'll be doing the interest calculations and we will be telling if there is any shortfall of it. So what is the pointers here? Is the interest paid for late payment or late deductions? Whether it is paid or not, you will see. Then you will see whether the months that is calculated as per assessee is right or wrong. Then accordingly, you will start reporting here. Is there a payable amount in audit exercise? While doing this exercise, is there any payable amount that we have identified? We have to see and we have to ask the client to make the payment. Let us take an example. Now, actually, what happened in April month, there was a bill from the, say for example, an AMC fellow. The bill was received in April month. You made the payment to him in April month only, but you have not done the TDS up to March. In March, you identified, seeing the payments and all the categories, the payment was support. You had to make the TDS payment. Now, what should be the date of TDS deduction? Can you answer in chat box? In April 22, the transaction was there. In March 23, the client is making the payment, TDS payment. What should be the trigger point for TDS? Which month should be the trigger point? Can you answer in chat box? April 22, AMC bill was received and paid. And in March month, you have actually made the TDS payment. What is the trigger point for TDS, April or March? Can you answer in chat box? Satish says April, Rakesh says April. Till 30th April. So the example is John. In April 22, the transaction was there. And in March 23, you have identified it. March 2023, you have identified it. So what should be the trigger month? The trigger month should actually be April month. Now, while filing the return, the assessee has filed the return telling that this transaction is actually incurred in March and therefore I'm making the payment in March. So now, is it correct? It is wrong. So there could be this type of situations also where the client might have told that the trigger point for the TDS is at a later stage, but actually you in the process of audit you might have identified that the trigger point for the TDS is in the earlier months. So in such scenarios, what will happen? In such scenarios, you have to calculate the right amount of interest that the client has to pay and disclose it in the this column. Is it clear? Is it clear? Can we go to the next slide? Yes. So stock details. See, yesterday we saw many examples of warehouse, retail stores, and things like that. So what is happening is under this clause 35, we are asked to give the details of stock. So what are they asking? Let us see once in the form 3CD and then jump back here. See, in case of a trading concern, what is a trading concern? Where you are buying and selling, yes or no? Is it clear? Rakesh is asking a question. What if threshold not exceeded in the previous month, hence not deducted? Then that is right, Rakesh. Then there is no issue. In our example, the threshold also was crossed. Say the AMC payment was 1.2 lakhs. It had already crossed the top. If the amount has not crossed the threshold, then in the month in which the threshold crossed, in that amount only TDS will be liable, and accordingly there will not be any excess interest. So coming back to our second clause 35, in case of a trading concern, see first point is we should identify whether our client is a trading concern or a manufacturing concern. Because for trading concern, certain clauses are applicable. For manufacturing concern, certain other clauses are applicable. Is it clear? Is it clear why we have to identify? Yes. So in case of a trading concern, the questions asked are very less. So what are they asking here? What is the opening stock? What is the purchases during the previous year? What is the sales during the previous year? What is the closing stock? And what is the shortage or excess if any? So these details we should maintain it. And if you see here, they're telling something important here. What is this? Give quantitative details of principal items. Say, for example, I'm dealing in thousands of products, and there is a small product which is a small screw. For that also there is opening stock, closing stock, and shortage and excess, and all these details are there. Should I have to disclose that? Yes, that is right. So there is something called materiality also here. So they are trying to bring in the concept of principal item. So what is principal item is defined in our guidance note to the tax audit. What they define is it is whatever the value of it is more than 10% of the total purchases or the turnover in the current year. So in that way, only the big items will get categorized here, and only for the big items we need to give the details here. Is it clear? Any doubt? Further, for the manufacturing entities, what are they asking here? Give the quantitative details of the principal items of raw material, finished products, and byproducts. So this is something new which is coming out in the manufacturing process. Suppose I'm manufacturing a certain product, but as a byproduct, I'm getting another product also. So in such scenario, you should give the details of byproducts also. So what is my opening stock of raw material? What is my purchases? What is my consumption during the previous year? What is the sales during the previous year? What is the closing stock? See, additionally, they are asking what is the yield of finished products. What is this yield? What is the yield? Any idea? Can you answer in chat box? What do you mean by yield? If you know it, you can answer it. If not, you can say, I don't know. Murthy says input to output ratio. That is right, Murthy. So suppose I have issued a product of, say, 100 units I have issued it, and my yield is, say, 80 or 90. The opening stock, the raw material is, say, for example, 100. Let us take an example of sculptures. So initially a stone will come, a sculptor will start doing the carvings, and finally a good a sculpture will come out. So in this process, what happens? The raw material is a stone, the finished product is a good idol. So this stone to idol in this process, sometimes what will happen? The stone breaks. So when the stone breaks, then the finished product will not come. Suppose my stones are 100 and I expect 100 idols, but actually idols will not come 100 because sometimes breakages happen. Suppose I get 90 as idols at the end of the year, then I will call it as my yield is 90%. So basically it is a ratio of input versus output to identify what is the yield of the product. Then percentage of yield. So yield in my case was 90 and my percentage is 90%. So shortage or excess, if any, is identified, we have to put it here. Finished products or byproducts. What is the opening stock that was there? If I have made any purchases, purchase the amount. Quantity manufactured during the previous year. What is the amount that I have, what is the products that I have manufactured that will get added here? Sales during the previous year and closing stock during the previous year. So in this way, we have to fill up this table. But are we generally filling this up? What is the practice that is followed in your office? Can you answer in chat box? Are we filling this table? What is the practice that is done in your office? Yes, Harshita says she will fill this product, this table. So that is right. So in some offices they will fill it, some offices they will not fill it. It basically depends on the client. So sometimes client has maintained the stock registers and is giving the data, then we will be filling this up. Suppose the client does not have the required data to give this means, then we will not be in a position to give this data. So in such a scenario, we will have to qualify the report and we'll say tell that this information is not available for us to give the data. So in that way, you'll be doing it. So traders have a separate table and manufacturers have a separate table. few cases we may not be able to find the quantitative details, so we don't fill. That's right, Harshita. So sometimes you don't get the details, so you won't fill it. And also we'll apply the concept of principal items, and then you will start filling the table. So ascertain if the client is a trader or not, then accordingly choose the respective clauses. Whether stock certificates from the client and verify whether the stock certificate from the client is received or not, and verify the same for filling up this table. So basically, as I told you, this information should be given by the client to us, from the client to us, and once that information comes, we will start verifying that. We cannot sit and prepare this table. So if we have to sit and prepare it, it is not possible. So who is the doer, or who has to maintain this data? It is the client's responsibility. So client should give this certificate with the data, and once they give it, we will start verifying it. And once all the data is right, we will put the data there. If the data is not right, we will give the necessary qualifications. So as we discussed, only principal items are to be reported here. Petty items need not be given. Say out of my 2000 products, a small nut or gold, if I'm not giving it, it does not matter. And what does this principal item mean? Normally 10% of the purchases or consumption or turnover is considered as principal items. Is it clear? So Murthy is asking practical expediency to reconcile stores ledger with the physical verification. That's right. So some of the test checks that you will do is you will try to reconcile your physical stock with the book stock, and you will go back to the previous date, and you will try to see whether it is matching or not. All these are the verification methods that you will use to see whether this data that the client has given is right or wrong. Is it clear? Any doubt in this class? Yes. So let's proceed. Deemed dividend. What is this deemed dividend? Any idea what is this deemed dividend? This clause 36A is specifically asking for deemed dividend data. So let me explain to you. Deemed dividend means an amount. For example, what I'll give you an example. There's a private limited company. So in this private limited company, the company has got accumulated profits. So when there is a accumulated profits, what will happen? Usually, the company will try to give the dividend. But since it is a private limited company and owner has got a decision making power, and he has got the required powers to grant loan to himself, he will start granting loan to himself. So what will happen? Instead of giving dividend, he'll take it as a loan. So when he takes it as a loan, what will happen? When he takes it as a loan, what is the ultimate purpose? He should be able to use that money. Yes or no? He'll use that money by taking the loan, and he'll never repay it. So in that scenario, what will happen? It is a tax loss for the government. So government is telling that where you have got accumulated profits and you have taken some loan. So in such scenario, government is telling that that amount, whatever you have taken it as a loan, you will consider it as a dividend. So that is why they are bringing in a deemed fiction, telling that it is a deemed dividend. So in such scenarios, you will call this amount of loan as a deemed dividend, and it will actually get taxed in the hands of the individual taxpayer. Is it clear? Is the concept of deemed dividend clear? Okay. So in such a scenario, when the company has given loan to such directors or shareholders, as a deemed dividend is getting attracted, then what will happen? Then what will happen is that the company has to basically the shareholder has to pay dividend tax on that. It will be considered as income for him. And what is the reporting requirement for the company? The company will have to say that yes, this amount, if yes, then the amount and the date of receipt, it should disclose it in the clause 36. Is it clear? Let us see the clause once. Then we can go to the next slide. 36 has been removed. 36A has been inserted, where any assessee has received any amount in the nature of dividend as referred to in clause E of subclause E of clause 22 of section 2. If yes, then amount received and date of receipt. So the next clauses are very simple. Give the details of the reports, give the details of disqualification or disagreements or any amount that any matter that is reported. So these three clauses are of a similar fashion. That's why I've grouped all of this together. If there is any cost audit report that was required to be done, then the details of those cost audit report. If there is any disqualification, that disqualification. If there is any disagreement or any matter to be reported, that amount should be reported. So in this fashion, you will do for cost audit report, you will do for excise audit that would have been carried out. And if there was this is a prior thing, service tax audit was there previously. So that service tax audit was there means in that if there is any report, then this thing gets triggered. Is it clear? Is this slide clear? Any doubts here? Can we go to the next slide? Okay. Key ratios. See, this is an important slide. Based on this slide only, sometimes the department selects the case for scrutiny. What is being asked here? Total turnover, gross profit, net profit, stock in trade, material consumed versus finished goods produced. So these ratios, see, first thing is turnover of the assessee. They are asking the turnover here. And further, what they are doing, they are trying to compare the profit. This is the GP ratio. This is the net profit ratio. This is the inventory turnover ratio. This is the material consumed versus finished goods ratio. So these ratios, they're asking us to fill it. And further, they're also asking us to fill the previous year records also here. Is it clear? There is a definition for every item that has been reported here. So what is materials consumed? They have given a formula for what is materials consumed itself. That much amount, what is the finished goods produced? For these two things, there is a specific formula itself. We should apply that formula and arrive at those numbers. It is not just whatever is there in your P&L account, you'll pick and write it here. So there is a specific formula that you have to use it and determine these numbers. This turnover is readily available. Gross profit, some cases it will be readily available, but some cases it will not be readily available. See why? Because in a Schedule 3 format, there is nothing called as gross profit. So directly the net profit comes into the picture. PAT and the PBT and the PAT comes into the picture. So for gross profit also, there is a formula. We have to use that formula and determine what is the gross profit. Net profit, that is always there with us. Stock in trade is available. So this 0.5 material consumed, finished goods, gross profit. For all of this, we have to rely on these definitions and get the correct understanding and do the calculations. Is it clear? Any doubt in this slide? Yes. So let's go to the next slide. Demand raised and refund issued under other laws. See, what is this other laws? Other laws means that other than Income Tax Act and Wealth Tax Act. So whatever demands and refunds that is there under GST, excise, service tax, sales tax, environmental laws or labor laws or any law other than the Income Tax Act. Whenever there is a demand raised or refund issued, then we have to give the details of that under this clause. So what is this next? Details of Form 61, 61A, 61B. 61 is a case scenario where a firm, for example, banks will usually file this or certain entities which is required to collect PAN and where the assessee or the customers have not provided PAN and they have given certain declarations. So in that case scenario, we will have to collect those declarations and file an annual return that is called as Form 61. 61A is SFT reporting. SFT reporting, there are certain specified transactions, specified financial transactions which requires reporting. Usually what is applicable is if there is any cash transactions, cash sales beyond 2 lakh rupees, that gets reported here. And if a company has issued any shares which is more than 10 lakh rupees, then that will get reported here. These are the generally common 2 points that will get applicable for most of the clients. So in such a scenario, the tax audit clients will have to file this SFT reports. So this SFT reports, whether it is filed within the due date or not, is what is required or has to be checked here. And whether it is accurate or not also has to be checked here. So in a similar fashion, 61B also certain entities needs to fill it. It is a statement of reportable account that requires to be furnished by an Indian resident who is a specified person. So as the definition says, it has to be filed by specified persons, and only a specified reportable transactions are required to be reported here. So whenever these forms are applicable to your client's entity, then whether these forms have been filed properly or not, you have to verify and you have to give your comments there. So let us see the clause once, what it is asking there. See here, if the assessee is required to furnish, whether the assessee is required. So if the assessee is required, only then this clause will be applicable, clause B. If not, it will not be applicable at all. So income tax department reporting entity, this is ITD REIN number. This number we'll have to disclose. Form type, say form 61, 61A, 61B and things like that. Due date for the furnishing, date of furnishing it, whether the details that is required to be reported. If not, please list out the details. If any information is missed out, then they're asking us to report it here. Is it clear? Any doubts till here? So Dheeraj is asking, can you brief 61A and B? So Dheeraj, as we discussed here, so there are certain transactions where you have to collect the PAN number of the clients or your customers. So in those scenarios, you have to collect the PAN number. Suppose a person says that I don't have a PAN number, then they have to collect some declarations. So when you collect those declarations, all the accumulation of those declarations, you have to file it in Form 61. So when you file that Form 61, whether that form is filed properly or not, whether any information is incomplete, all those details you'll be checking. 61A is SFT reporting. SFT reporting means specified financial transactions reporting. Specified financial transaction reporting, as I told you, an example is where cash sales more than 2 lakhs to a single customer. Suppose I am selling it some product to you, Dheeraj, for cash, then that amount, the sale value, if it is more than 2 lakh rupees, then what will happen? SFT reporting gets triggered for you, triggered for me. Then I'll have to give details of you in the SFT reports. So that Form 61A, I have to file it. Whether my filing is correct or not, as an auditor, my auditor should check it. So is it clear now, Dheeraj? 61B is one similar form which has to be filed by specified persons for few reportable transactions. Welcome, Dheeraj. So in this way, we have to fill in the details. Let us see the next clause. Next clause is reporting under section 286(2). So what is this? This is called as country by country reporting. So as you can see here, it is called as country by country reporting. Every constituent entity resident in India. See, for example, there are international groups. So in an international group, what happens? For example, Samsung is there. Samsung's head office is, say, for example, in USA, and Samsung has an office in India, means it becomes constituent entity in India for the reporting purposes. So this group, it has got branches in various countries. It has also got branch in India. But group related transactions and group related information has to be reported here. Why is it required? The income tax department doesn't want to lose any of the taxes. Suppose the group related transactions is so much, they will start assessing whether the entity which is there in India is disclosing proper income or not, whether there is any underreporting of income in India. All those analysis they'll start doing it, and they will collect this information by asking the reporting entity to file Form 3CEAC. Is it clear? Any doubts here? There will be an international group, and if any one entity is there in India, then it has to report the whole international group related transactions here. Is it clear? Any doubt here? Okay. So when that type of transactions are applicable, when such type of transactions are there is a threshold also for this. It is some 400 crores, I believe. So usually it does not come for small organizations. So if such an amount is there of transactions, such a quantum is there of the group transactions, then this constituent entity which is there in India has to do this additional reporting. So the first clause says whether assessee or its parent entity or alternate reporting entity is liable to furnish the report as referred to in subsection 2 of 286. So if this section is applicable or not, they are asking. If it is applicable, then they are asking us to fill out the other details, whether report has been furnished by the assessee or its parent entity or alternate reporting entity, whether that report is given or not, name of the parent entity, name of the alternate reporting entity, date of furnishing the report. So all these additional data they will be asking from us. Is it clear? Any doubts here? Yes. So let's go to the last clause. Say this clause is like breakup of total expenses. Breakup of total expenditure of entities registered or not registered under the GST. See this clause 44 was kept in abeyance for long period. Yes or no? Any idea that it was kept in abeyance? Did you know that? Yes, Rakesh says yes. It was kept in abeyance for long duration. But in this year, that abeyance notification has not come yet. So therefore, we have to fill out this information for the current year. But is it an easy task? What are they asking here? Total amount of expenditure incurred during the year. This is easy. This is available with us. We'll give it. Expenditure in respect of entities registered under the GST. So column 3 to 6 is all the entities that is registered under the GST, and this is 7 is where which is not registered under the GST. So what is this 3 to 4? So whatever expense I have got it, I have to bifurcate into bucket 1 and bucket 2. Bucket 1 is 3 to 6, bucket 2 is 7. So under this first bucket, again I have got sub buckets. I have to classify it between 3, 4 and 5 relating to goods or services exempt from GST. There could be certain transaction which is exempt from GST. For example, say fruits, vegetables, groceries, and things like that. It is completely exempt. So if we, or education for that matter is exempt. So if it is coming under exempt category and it is registered, then we should give under clause 3, under the column 3. Relating to entities falling under the composition scheme. Suppose this entity from where we are incurring this expenditure is under composition scheme, means we should put under clause 4. Suppose it is under registered entities, means normal registered entities, means we should put it under 5. Or if it is not under any of these and it is unregistered, means we have to put it under clause 7. Now you have understood the columns. Is it easy to fill this table? It is not easy. It is a very difficult task because you have to take all the transactions that is there in your profit and loss account, and you have to categorize each and every transaction. Now, do you think that the assessee has already maintained this information in his books of accounts? Do you get some bifurcations in the tally? No, it is not there. Some cases they have updated the vendor details, like say GST numbered or not. But further, they have put the GST number also, means whether it is composition dealer or registered dealer, who knows? We don't know, right? Yes or no? So that's why this table is very difficult. So here, what is the stand that we are taking is, or generally all the CAs are taking is, we are trying to get this data from the client. So client should provide this data. So based on the client's data, we'll do some test sampling. So that test sampling, if it is right and good, we will go ahead. If it is not right, then we are going to qualify it. So generally what CAs are doing is they are telling that the information, whatever is maintained by the client is not up to the mark to give the required details as per the tax audit report to the department. So this kind of one qualification or one disclaimer point they are putting it, and they are starting to give this data. Is it clear? Any doubts in this class? Yes, even capital expenditure should be included here. That's right, Murthy. So expenditure means it's not just revenue, it is also capital expenditure. So all the expenses, they are trying to get this information from us. Any doubt? Can we go to the next slides? Okay. So the next slide is about the guidance note. So you have to read this guidance note at every instance. Say whatever doubts you may get, you'll always have to fall back to this guidance note. And this guidance note is every year it is issued by the institute. So sometimes what happens, you will get only 2014 edition here, but you'll have to search for it. When you search for it, you will get the latest version also. You can see the version history here. It is 2023. So when you read this latest version, you will get the latest amendments. For example, in our case, 194R was a latest amendment. You can find related clauses included in this guidance note. You can see here. So in this way, you should fall back to this guidance note whenever there is a need, and always take the latest guidance note and do your workings. Any questions? If you have any questions, you can ask now. Okay, thank you all. It was a very nice to teach you people. It was very interactive session. Thank you for keeping up the spirit and being participative in the session.
I thank everyone present in the session, even until the end. And also, I really believe that today's session has been an extremely wonderful learning experience for everyone. Personally, I feel that I have learned so much more than what I usually have known. And all it is all because of our speaker today. Thank you so much, sir. It has been a very great learning experience for all of us. And please stay connected with SICASA Bengaluru also. And we need more people
Definitely.
like you to be guiding all the students like us. Thank you so much, sir, and thank you everyone.
Definitely. I will drop my phone number in case you guys have any doubts. You can always connect to me in the chat box. You can save it. Also, John, you had a question on that clause 30. Sorry, the time does not permit, but we will discuss after this session.
Yes, sir, sure. Thank you so much, sir.
Thank you all for all your participations and for giving this opportunity.